What's up, Discord? It's Brendan. Today we're going to talk about trading like a pro with money flow. Guys, this is a very important video. This will really help you understand the marketplace and how to look for high probability trades. Couple prerequisites to this video. First off, you probably need a nice button-down shirt like this. The more obnoxious, the better. If you have a mustache to throw on top of it, you could find your edge. But the third and most important thing is you need this MFI, the X5 MFI. This is a free gift for members here in our room. Fractal Trade 15 is a member and an expert programmer. He made this indicator for our room, so I would highly suggest you download it. It is fantastic for judging moves in the market. Guys, high probability trades. This is what you want to focus on for big moves, big money trades. I'm going to show you here an example on Bitcoin, how I found that 48,266 top. I'm going to show you also on the Russell. Okay, so let's talk about the indicator, the MFI, the money flow index here at the bottom of my screen. This takes the price calculations from the RSI. The RSI only does price calculations. The MFI incorporates volume. Very key difference. Volume never lies. Price often does. The legends all knew this. Going back to Dow, Wyckoff was basically the founder of modern day volume studies. You hear volume spread analysis, volume price analysis. These are all derivatives based off of Wyckoff's work. Remember, volume is the buying and selling in the marketplace. It cannot be manipulated, but price can. Let me give you an example. Let's say I'm an institution. I want to sell my Tesla. Okay, I got a big block of Tesla. Well, let's say Tesla is trading at $700 a share. There's nothing to stop me at market open from going out there and say, let me see if I can get 710 a share. If I put it out there at 710 and a couple people buy it, the price rises in Tesla up to 710. But there's no velocity to the move. It was a small amount of people buying it versus tens of thousands of people or hundreds of thousands or millions of people buying it. Then you have velocity. The reason this is important is this is how you get volume divergence, and this is how you build tops and find bottoms. If you understand volume and how volume works, which is money flowing into and out of an asset and its correlation with price, you can find high probability trades, guys. So let's go ahead and jump into this. The X5 MFI. Open this up, guys. The default length in TradingView is 14. I would suggest you play with the lengths. I like Fibonacci numbers. I'm using a much smaller length of 8. This is time periods, okay? So you're looking at the calculations here over 8 candles. I'm looking at money flowing into and out of an asset. The smaller this number, the more signals you're going to get. So you may want to play around with different numbers. You may like a longer MFI, a shorter MFI, depending how you're trading and what your style is. Now, the way this is defaulted in TradingView, if you're using a TradingView indicator, you have 80 for overbought and 20 for oversold. Okay, so what you're doing, the actual creators of the MFI recommend 90-10. So what Fractal did, which is really smart, if we open this up, he made a bar system. So you can see over here to the right, 80 is the bottom, 90 is the top. This is overbought. Okay, you see this? Anywhere in this bar is overbought. Now below it, same thing. 20's the top, 10's the bottom. In the bar or underneath the bar for certain, this is oversold. Okay, now Fractal also took a 13 and 55 EMA. Very common to trade with 1355 for bullish and bearish crosses, and this makes an EMA cloud. Okay, this is something you can also turn off if you don't like it. It does help you find bullish and bearish crosses, and there is a median line as well, just like the RSI. Okay, but this shows you relationships of support and resistance when you're looking at the cloud and the 1355. I like the setup the way it is. Now let's talk about divergences, guys. This is how you find big trades. So here's the Bitcoin trade, the 48,266. We're going to go over this. So really, you know, in today's modern marketplace, there's so many thousands of indicators you can download, right? There's so many thousands of indicators. You can have stuff all over your chart. But if you understand some basic concepts about volume, some basic concepts about support and resistance and market structure, you can really simplify your charts. But let's go ahead and look at this with the money flow index in relationship to volume. You need to trade with these two together. So I highlighted this area right here because this is a price rise that Bitcoin had here on the daily chart. You can see the price rise, and then you can see it made a double top. You see that? It made a double top. So could we have found this? Well, let's look at a couple of things. On the money flow index, you remember this is volume and price. So you can see the money flow index is going up. It's going up, but it hits its first peak at this candle. Okay, because you're doing volume and price calculations, hits its first peak and then slightly goes down and then goes over to the right. You already have divergence because what did price do? Price kept going up. Now money does come back into the asset here and peaks out again on this candle, right? You see that? Peaks out on that doji candle, but you had divergence right here. Now, when you start looking at this on your actual volume, you guys hear me preach this all the time. Remember, on advanced volume, again, Fractal Trade 15's one of his indicators. You can download this as well. This highlights high relative volume, and it also shows you your breakout bars above your moving average. This is all low volume. So you see this price rise? No breakout volume at all. And actually, looking at where the price rise started, well below the moving average, the 21-day moving average. You see that? So you're well below. You have price rise, you have volume divergence, you have MFI divergence, money flow index divergence. And then when you hit that second peak in the overbought area, you can see, look what happens to the MFI. Money starts exiting the asset. Price doesn't really mimic the MFI. It goes down and then it goes back up, rising back and forth as the MFI keeps descending. Okay, you're making divergence. And the next time when the MFI is turning red, because this is trend gradient, you see the green goes to white to neutral to red to bearish. MFI is turning red is when you start getting your dump candles. And as a matter of fact, the first volume bar to really show to above the moving average is a selling bar. You see that? Your selling bar right here. So if this is confusing to you, don't worry about it being confusing. What you need to understand is a calculation of price and money is showing you that you have price rise, but it does peak out, okay? Your first peak is here and goes sideways as you get divergence building up for a top, and then you peak out a second time at that doji candle, and this is how you get a top to form. There's no more money entering the asset. You don't have breakout volume. Now, what we want to do, guys, is trade with confluences. Is this enough to take a trade? Well, if once you get comfortable with it, sure it is. But I like to trade with market structure and I like to trade with fibs. And knowing that we are in a descending market and we're going to find confluences, we just had a markdown. Remember in Wyckoff, there's 4 separate steps. You have accumulation, which is when price is being bought and sold in a defined trading range. Then you have markup, which is obvious. You have markup. And then you have distribution where you make a top and then you exit that top. Markdown when you leave, when you're on your way back down to accumulation. Okay, it just repeats over and over again. And so this is what you're looking at here. So we had the markdown from the all-time high. We had an accumulation range that broke down here. So I'm going to go ahead and mark this off in Wyckoff. We have a selling climax candle. And I have a automatic reaction from that candle. And you guys have seen me do this numerous times. Selling climax, reaction, right? Here you have volatility, you form a double top, you come back down, secondary test of your base, more volatility, you can't exit the trading range, you end up making a double bottom, and then you do exit the trading range, right? So we know in Wyckoff here, you're trying to break out from accumulation, get that cup, right? Get that Livermore pivot to shoot out, right? So is there any way we would have known this was going to break down other than the fact that we could see we were building a top? We can see that the money started exiting the asset. We can see we never had volume breakout above the moving average. Yes, there's other ways we could have found this. We know we're in a descending market. We know it's a bear market. So let's find some fibs here. Trend-based fib, guys, I have a video on this as well, but remember the concept Dow talked about, price moving in waves. The trend-based fib gives you a wave projection. This is how I nailed that exact dollar where I said 48,266. Remember, 48,266. Now here on the Coinbase chart, this got to 48,240. So within $26 on a $48,000 asset, you got the top here at the fib. So you're looking at confluences. There's nothing that says it has to stop at this fib, but we do know we have less money in the asset. We never got breakout volume. We have volume divergence. We have a key Fibonacci resistance at 48,266. We're in a descending market. So let's look at our long-term moving averages. You guys hear me preach this all the time. In bear markets, look at your 200, 233 in every time frame. You hit the 200. Okay, you hit the 200. You start piling on all your confluences for resistance here. This is why this was such a high probability trade. If you want to look at ways that you would know where else you could possibly enter this trade, well, you guys have seen me talk about the whole 55. Fractal turned me on to this as well. Using his TGMA, this is the trend gradient moving average. You can change the colors showing bullish, bearish, and neutral. But he also has the ability to select the HMA, which is the whole moving average. This is almost a zero lag moving average. Fractal likes this at the 55 level. And choppy markets, you can see you get a lot of signals, but when you have a trending market, look where this broke through in a bearish nature. Broke through right here near your double top, right? The exit of your double top, falling back into the Wyckoff trading range and falling out. So you just start looking at these confluences. You can look at your VPVR. You could look at potential Fibonacci patterns. Lots of different ways you can trade. But guys, just to give you an idea of how powerful this trade was, if you held on to this the whole way, which I wish I did. I'm too greedy to hold on to a trade this long. But this trade, where I posted this trade, 48,266 being the top, that's a 63.5% move in Bitcoin, 63.5%. It is extremely powerful when you have volume divergence in a descending market, okay? When you find volume divergence and you build a top, this is how I was able to find this on the indexes. I keep waiting to find it on Bitcoin. I'm always watching these bear market rallies. Bear market rallies typically have low volume. Price will rise, euphoria builds in the market. People are paying prices that is not backed up by velocity. There's not enough transactions, there's not enough people paying that price, but certain people, Michael Saylor, will keep paying higher prices and lifting the price of an asset, but it's not backed up. So when it hits key resistance, it will fail, okay? Let's look at this on the Russell. Russell again, same thing, okay? This is really clear here, which is I want to show you this example. And you guys know I like to short the indexes. If we just take a trend line, let me move this out of the way. You take a trend line here, look at your price rise. You see your price rise up here. This is the Russell coming down and building some type of top structure, okay? Now look at your volume over here. Volume left to right. I mean, this volume is so low and price is rising up and making a top. Look at your money flow indicator. Okay, your money flow indicator using your EMAs as support. You get money flowing into the asset, right? But where's your first peak? Line it up with the candle. Let me spread this out a little bit. Where's your first peak? Line it up with the candle. It's right here. This first candle right there is your first peak, and then you have money exiting the asset, okay? You get a slight decline here. You're getting a double top forming, as you can see, and then you have money going back into the asset. But again, your peak is not up here. Your peak is down here at this doji candle. So you're looking at where your money flow is peaking out. Because remember, this is price and volume calculation. So you're getting the price rise, showing you the price, but you're not getting the volume to back it up. This becomes divergence, okay? Your peak should be here, price kept going up, and when you marry it with your actual volume divergence, it's confluence for the move. This is a false breakout, okay? This is a false breakout, easily tradable when you understand money flow and how it works in conjunction with volume. Okay, and you can also find this utilizing your fibs as well. You can use your fib waves and see where this lands on your fibs. You can see you have the one fib there if you lay the fib out that way. You can do a tighter wave projection here. Always moving my trend-based fib around to see how accurate it is. This looks good. You see the support being used here at the one fib. Very tight little wave before a breakout. You get above the 1618. But what other indicators do you have, guys? Again, descending market, daily time frame, bear market. Where's your 200? Well, it didn't get to the 200. That's above it. Where's the 233? You hit the 233, the 1618 on the fib, volume divergence, money flow divergence, and what happens to the asset? You get a nice price decline, guys. This is what I'm talking about. Understanding volume in the marketplace, understanding the macro environment of where you're trading. That was a 24% move, almost peak to trough, 23.29% peak to trough. You have to understand all these things, and this is why it's important as traders to remove bias, okay? Remove bias, look at the support resistance levels, look at your market structure. You don't have to be an expert in any one thing. You don't have to be a Wyckoff expert. understand how to use fibs, how to find confluence with the indicators that you like, and use powerful indicators like volume and money flow to look for divergences and to spot these false moves in the market, because they will pay off when they hit key resistance on a pump, okay? Always keep that in mind, guys. Hope you guys enjoyed this video. I'll keep doing this series as well. If you have any questions about MFI, remember, you trade with it the exact same way as RSI, but you are getting more information in the actual indicator because you are incorporating volume. Trade with it with volume, and try layering it with your other indicators that you guys like to use, and I think you'll really enjoy it. All right, guys, have a fantastic day.